Welcome to The Explainer, where we break down the big events using the source material itself. So, let's get right into it. We're talking about the absolutely wild market ride on January 21st, 2026. In just 24 hours, the market had a breathtaking swing of nearly 1,500 points. We're going to unpack exactly how and, more importantly, why that happened.
So the scene is Davos, Switzerland. You know, the home of the World Economic Forum. While all the global elites were gathering to talk big ideas, the real drama was actually about to kick off in the global markets. And it all started the day before.
On January 20th, the Dow just tanked. It plunged 869 points. So, why the panic? Well, it was a massive Sell America wave, all sparked by President Trump threatening new tariffs against European allies. The whole thing was over a pretty heated dispute involving Greenland, of all places. And that just set the stage for an incredibly tense 24 hours.
Okay, so that brings us to our first section, the precipice. After that massive 800-plus point drop, you can bet traders were on high alert, just bracing for impact. You could almost feel the tension as the market roller coaster was just clicking its way up that first really terrifying hill.
And sure enough, before the opening bell even rang, the futures market was just a sea of red. I mean, look at this. Dow futures down 170 points, NASDAQ down about 77. This just shows you the deep, deep anxiety that was carrying over from the day before. Nobody knew what was coming next.
And so all eyes were laser-focused on a single event. As this morning brief from philstockworld.com put it so well, the entire market was basically hanging by a thread. And what was that thread? It was President Trump's upcoming speech at the World Economic Forum.
So what were traders actually watching for? Well, it boiled down to a few key things. First, the speech itself. Was Trump going to double down and escalate things, or would he de-escalate? Second, you had the bond market, which was flashing its own warming signs. But the big one, the real question on everyone's mind, was this. Were we about to see the famous taco trade?
So let's unpack this taco trade, because it's absolutely crucial to this whole story. TACO stands for Trump Always Chickens Out. It was this whole trading thesis that had built up over the years, basically suggesting that after making these huge, aggressive threats, the president would often pull back at the very last minute. The big question was, would he do it again?
And here we go. Section 2, the first drop. As President Trump took the stage, you could have heard a pin drop on trading floors all around the world. The entire market just held its breath. The uncertainty was just palpable. So the speech started, and for almost an hour, it was all pretty familiar stuff. As Phil from philstockworld.com put it, it was just a lot of the same old rhetoric, and that just left the market completely on edge, totally uncertain. He talked and talked, but he never addressed the elephant in the room, those Greenland tariffs.
Section 3, the slingshot reversal. And then, after nearly an hour of this nail-biting tension, the entire narrative just flipped on a dime.
Deep into the speech, it finally happened. President Trump confirmed the U.S. would not use force, and then he announced a framework for a future deal on Greenland. In an instant, he had pulled back from the tariff brink. The taco trade was officially on.
The market got the answer it was waiting for, and the reaction was just instantaneous and completely explosive. As this Philstock World member typed in the live chat the second it happened, it was a classic taco. You could feel the relief ripple through the market. And this table just brilliantly illustrates that reversal. Just look at these closing numbers. After being down big in the pre-market, the Dow finished the day up nearly 600 points. Now, when you add that gain to the 869-point loss from the day before, well, that's where you get that insane 1,500-point swing. A day that started as a potential disaster turned into one of the biggest rallies in months.
The fear that had gripped the market just hours earlier had completely flipped into euphoria. The sentiment, captured right here by Phil, was that once again, this market was simply unstoppable. All right, let's get to our final section, the new age of instability. Let's zoom out for a second. What does this absolutely bonkers day of market whiplash really tell us about the world we're all investing in right now, here in 2026?
Now, this is really interesting. This slide captures the fundamental tug-of-war that every single investor is dealing with right now. On one side, you've got exactly what we just saw, a geopolitical headline creating insane, short-term instability. But on the other side, as the folks in the AGI Roundtable Wrap-Up chat pointed out, you have this relentless, long-term optimism about AI that just keeps acting like a safety net, pulling the market back up every time.
This quote from Charles Schwab's Outlook really just nails the new normal. It's not just uncertainty anymore, which kind of implies a range of possibilities. No, It's instability. These rapid, unpredictable shifts that create massive volatility and this constant dizzying rotation within the market itself.
And this, right here, is the key lesson from that wild day, summed up perfectly by Phil. In a market that's driven by headlines and political chatter, it is so crucial to tell the difference between all the noise and actual fundamental change. Reacting to every single tweet or speech is just a recipe for disaster. Ultimately, this single, chaotic day leaves us with a really provocative question for the modern investor. In an era where a single speech, maybe even just a single turn of phrase, can trigger a 1,500-point swing in the world's largest stock market, what is the role of traditional fundamentals? What do they even mean anymore? That's the question investors are still grappling with.